Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me back on the show, Jim.
Chris, how are things going for the gold and silver miners, especially the juniors?
Well, yeah, there's some pretty exciting price action starting to take place. I mean, we've seen the precious metals market really for the last 8+ months have just been in this really painful downtrend for people who are holding them, waiting for the next move up. You know, when you step back and you look at the big picture, gold is on the cusp of really gold, silver, and miners are all on the cusp, just days away from potentially triggering a new kind of short-term buy signal in the sector. So, the way the charts have played out is going to create, I think, a pretty strong rally to the upside. And more specifically, if we were to look at the GDXJ, which is the junior miners ETF, based on the chart pattern that has formed, it's actually showing there's about an 86% upside rally from where the price is today. And if a whole sector can move up 86%, then the individual stocks, which I call golden rockets or golden rocket ships, they can move up, many times. They're very high beta compared to the index themselves. So if the index can move 86%, some of these gold stocks and silver stocks will move 5-10 times what the actual index is doing. So there's some really explosive moves, and you might be thinking 86%. Well, that's a pretty big move for the gold miners sector, but you look at the solar sector last year, it was up, 150, 250%, depending where you look at the lows, the solar sector, and a lot of those individual solar stocks were up like 800, 1,000, 1,600%. This is the same scenario with gold miners. If you're in the right ones and this market turns positive, then, there's some pretty exciting gains to be made in individual plays or just the ETF alone.
Is inflation the driver behind the gold?
I don't really know. I mean, I don't really look into inflation and all that stuff when it comes to trading in the charts. I really just look at where the money's flowing, and money's been flowing out of the metal sector for a long time, and it's just been out of favor. Obviously, I think there's people concerned of that. And obviously declining currency values. We're all expecting, the dollar to collapse in value. Whether it does or not, we won't know till it actually happens. But there's a lot of positives for why metals and miners should go higher. But the reality is, if you got to wait until the charts are actually a new uptrend. Once a trend is in place, it's more likely to stay in that current trend. And right now the trend is still down. We need to wait for it to break this downtrend with a strong rally and a pop, and that could really shift the tide from a downtrend to at least a side trend and potentially kick it into a new uptrend. So while we're close, we're probably still several days, if not even a few weeks away from this actually confirming a new uptrend. And then once it's confirmed, that's when I think the excitement really starts. It's not about picking a bottom. I know a lot of people, everyone seems to be trying to pick a bottom in miners, and they've been trying to do that for months on end, and it keeps going lower and lower every month. And that's not the way I work. I'll let something put in a bottom. It'll have a clear trend shift to the upside, and then I look to get in. I don't care if I miss out on the bottom 15, 20% of a move. I want to make sure that trend is in my favor, so when I get in, it's going to continue that trend. So that's the way I kind of trade and look at the markets.
Instead of the extremes, look at the trends?
Yeah, exactly.
The U.S. dollar, what's it doing, and is it affecting the price of the junior gold miners?
The U.S. dollar, it's in a downtrend, which is, it's in a long-term downtrend. I still think it's going to continue to flounder and struggle. Right now, though, at a short-term basis, like this week, it's actually at support. So I think we're going to see potentially a bounce in the dollar here. I think we're going to see some metals and miners pull back. I mean, everyone seems to be all over metals this week already and all excited. And when everyone's excited about it, and they're at resistance and the U.S. dollar is at support, we're usually going to see the dollar bounce and metals pull back and sell off. So we just have to kind of let the market do its thing. I think longer term, the U.S. dollar is going to continue to be kind of out of favor here for a little bit. And if the U.S. dollar really breaks down below a long-term support level, then I think we're going to be it's going to trigger that massive rally in the in the gold market. But we need to see the dollar index, break 88 to the downside, and then I think it's game on. I think that's when precious metals and commodities just go through the roof even more. I mean, some of them are already skyrocketing, like lumber. But I think they could get even worse if the dollar breaks down and starts a major downtrend.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, you've noticed over the last few months the rotation between senior stocks, then mid caps, then the juniors take over. Is that something that could actually prevent a stock market collapse because people are moving their money to where things are active rather than just leaving them in one place and hoping for the best?
Yeah, so there's been a really you could say a really frustrating shift in capital over the last several months. Really, the last 4 months we've seen there haven't been really clear leading sectors. We've been seeing individual indexes rally, like the Russell 2000. It traded sideways for like 2.5 years, and then just late last year, like October, November, the Russell 2000, the small caps, became leaders, and they just took off to the upside. And they were kind of leading the market. And in the last couple of months, they've actually fallen out of favor. They've been trading sideways with pretty big volatility, some pretty big waves of selling. And in the last few weeks, we've been seeing the mega large caps, especially the big tech like Apple, Microsoft, Google, Tesla. We're seeing all these just starting to come to life. They all had a big correction in the last month and a half, but they're actually showing signs of leadership. And so we're kind of seeing the money rotate. Last year, the NASDAQ was the major leading index. And then right near the end of the year, the Russell 2000 became the leader. And then we went dormant here for a couple months. And now it looks like the NASDAQ is about to take leadership again. And that's because these mega companies, seems like everyone wants to pile into these huge large cap companies. And the thing is, when these large caps start to rally, which they are, and they're showing lots of volume behind them, if people want to move into these solid companies, those are going to drag all the indexes up. And so we're looking at a point here where we might actually see some of the best performing pockets in the market might not be individual sectors so much. It might actually be back to the NASDAQ as the leading place to be, because it's heavily weighted in all those large tech. So it's pretty interesting how money keeps sloshing from small caps now back to large caps and back and forth again. So over the next couple of weeks, we're going to see how these large caps, if they get more legs behind them. But it looks like there's big commitment going into the large tech companies. The NASDAQ just hit all-time highs, as you and I were talking here. So there's pretty exciting move that the NASDAQ could start another major leg up.
We'll have more with Chris Vermeulen right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF.
surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on in the oil patch?
Oil's had a pretty rough ride over the last month or so. It was in a nice strong uptrend. You and I had talked about an upside target around $34, $36 a barrel months and months and months ago. That was a long-term, a big pattern. We actually hit that level, and since then we saw some big selling step into that market, and it's really put a damper on the price of crude. And crude oil went from more or less almost like $68 a barrel all the way down to $57, and now we're trading sideways, stuck in that range, currently at $60 a barrel. If crude oil can get some traction here, which it's trying to hold on and move higher, then we're going to see it, head dramatically higher up into the mid-upper 70s. And that's going to spark, I think, another big leg higher in the energy sector stocks. The energy sector stocks did exceptionally well to be the first half of this year, or the first few months of this year, and I think they could pick right back up and take off. But if crude oil breaks and closes below $57 a barrel, it looks like it's going to go a lot lower. It's going to definitely be a big leg to the downside, and people need to be aware. A close below 57 is going to trigger a lot of selling. The trend will then be down, and the energy sector stocks will be, out of favor as well. So there's a lot riding on crude oil, which way it's going to break. Can it get back above 62 and start a new uptrend, or is it going to break below 57 and start a new downtrend?
What's going on with platinum and palladium?
If you look at platinum chart, they've been trading sideways and chopping around for a few months. Definitely stronger. Platinum's been a lot stronger than gold and silver. Definitely holding up in a nice sideways pattern. We saw platinum break out in December of last year into a new bull market, and since then it had a nice little run up to 1,300 and change, and since then it's been pulling back, trading sideways. Platinum looks really good in terms of its overall pattern. It started a new bull market. I think short term it still has a little bit more downside. I think we could see it pull back down to the 1,100, potentially the 1,150 area, which is the breakout point of where the new bull market started. And a lot of times when a chart breaks through resistance, which on this chart is 1,050, it'll break through, it'll have its first run, and then a lot of times it'll come back down and test that level. And that's what I think could happen. But overall, it's in a new bull market. This pullback technically can be bought as a long-term investor because this should have a year or three to the upside, and it should mature going forward.
What's going on with Bitcoin?
Well, Bitcoin's got a nice pop today, up about 6%. I've got an upside target of 72,000 to 74,000 on it. It looks like it's having some type of it's having a breakout pattern this week when we look at it. And that should bring us up to that 74,000, which to me is probably going to spark another pause or pullback. Every time we hit one of these Fibonacci technical targets based on momentum and Fibonacci theory, we've seen a 15 to 25% pullback in Bitcoin, and it usually happens within a couple of days. And then it consolidates, which means it just trades sideways for a little while and builds up some momentum and then takes another run higher. So it's in a rally mode. It's running. It's got another $8,000 to $10,000 to the upside, I think, before it hits that next critical peak and then has to decide whether it's going to consolidate or reverse and break down.
U.S. inflation, the consumer price index, up sharply over the last 4 months. What's driving that?
Yeah, I mean, everyone is stuck at home, it seems, especially here in Canada and Ontario. We're in like home lockdown, but you can't go and buy anything. Everybody is everyone wants to go and buy, luxury toys. They want to build stuff. They want to improve their properties with building materials, but everything is through the roof. You look at lumber. Lumber's like, it's at $1,185 today, just going parabolic the last couple of weeks. I remember when I built my house, back in 2011, it was around 175 lumber, and now it's at $1,185, which just incredible, the value spike. Lumber materials are expensive if you can get them. Everyone wants to buy bikes and running gear and outdoor gear, but everyone is sold out. It's absolutely insane that you just can't get your hands on anything, and everything's selling at a premium. The Fed says there's no inflation. Of course, they gauge it in stuff that doesn't really matter. What matters are all the things that we need to buy continuously and constantly, like groceries and building materials and stuff. And those are the things that are skyrocketed in value, if you can even get them. So it's really frustrating that we're in this situation, and we have COVID, we had the lockdown last year, and it's just created this massive ripple, and prices are not really going up so much. Like, they're going up because there's just lack of demand, and people can just keep charging more, because if you've got a package or a skid of material coming in and that's all you're getting, you might as well jack up the price and pocket as much as you can, because you're not getting any more of that. And that's what people are doing. So it's really just forced the prices higher across the board for almost everything.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris, you can send them to info@howestreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.